Good morning, everybody. Hope you're all doing very well. So we're back for another stream. It's currently 4:20 in Dubai. How is everything in the UK there, AJ?
Yeah, good. The weather's horrible as usual. I thought it was supposed to be summer, but oh
Yeah,
well.
that's why I left.
Yeah, I'm jealous.
Yeah, no, yeah. I mean, to be honest, it's actually a good thing because that you're there because it just becomes unbearable out here at this
Does it?
stage. So
Yeah,
yeah,
in the summer.
no one wants to go outside.
Yeah,
Good time for trading cryptos though. Always stuck
yeah.
indoors.
Nice in a nice air-conditioned room.
Yeah, exactly. That's why we need that 24-hour action on the charts.
Yeah.
Um, but speaking of action, guys, there's been plenty of it. I want to go through what's being talked about very, very heavily, especially on places like Twitter, where we're looking through a crypto bill. I'm just going to jump straight in. We're going to have a look at this, right? So I'll move this, bring this down here. Hello to everybody who's watching. Good to see you. So I will, yes, go through this. So this Senate bill, there's a Senate bill that has been created by Senators Carol Loomis and Kirsten Gillibrand. So what this essentially would do would end the SEC's oversight of most cryptos and hand that over to the CTFC. And I'll show you this exactly what it means. So Securities and Exchange Commission would lose its authority to regulate a broad swath of the crypto market, including the 200 most valuable cryptocurrencies. I think that's absolutely amazing. I bloody hate the SEC. It's just, there's always just bad news. And I want to get into something a little bit later because they have their reasons for it, but I just don't think it's great. And I'm not going to go through everything that's in the bill, guys. Obviously, it's well over 100 pages, I think. But I've had a look through it, and I've gone through this article as well to highlight the key things for you. So firstly, the idea is it will eliminate the obligation to report crypto gains of $200 or less to the IRS. I think people will probably get into trouble with that. But I think that's really quite good. And it's only $200. So, not really too much. But that kind of eases people's worries around crypto. And if they don't want to touch it because of the tax. Now, currently, it stands almost no chance of passing in the current Congress. But it's expected to gain a new momentum in 2023. So nothing for now, guys. There is really kind of nothing. We have the midterm elections in November. And so that might then, especially with a lot of the lobbying that's happening, Sam Bankman-Fried from FTX, he's willing to spend, I think he said up to $1 billion or so. It's absolutely insane, just to try and make sure that that there's a crypto-friendly Senate or House or however it is that the politics are set up there. Now, so yes, it's the CFTC, which is the Commodity Futures Trading Commission. Here we go. Yes, I knew I had to highlight that. Commodity Futures Trading Commission. Now, this essentially is saying that, look, cryptos and Bitcoin are more like a commodity as opposed to a security. Now, this comes after years of complaints about the lack of clarity as to whether a digital token like Ethereum is a security. And there was all of this massive issue. We look at all of the issues that we've had with XRP, etc. Now, what these digital assets will be classed as are ancillary assets. So this will have to be added to the SEC Act, or the Securities Exchange Act of 1934. Now, this definition would apply to popular blockchains like Cardano, Solana, and the top 200 assets, as I mentioned. Now, it intended to codify the Howey test. Now, the Howey test was a test where this guy was kind of selling something, and they said, "Oh, you can't sell that," and he was like, "Well, it's not, not really a security, is it?" But we'll go, you can kind of look that up on yourself. Or I should say, by yourself. And now, looking down at page 69, something that I thought kind of stood out quite importantly was the approach to regulating stable coins, which I think is very, very good. One of the key features of this is that it would oblige stablecoin issuers to maintain a 100% return so that you could never have a run on the reserves. Now, I'm sure you guys know, a run is just basically where everyone decides to run to a particular place to get their money out all at once. Now, if that, you have a run on a bank, but typically banks don't hold their money here. So that's when everyone gets worried and the bank starts to collapse. That's the overview of this. I do want to say, the SEC, the reason why they don't like this is because they feel as though they need to protect the end user. There's the SEC, they are the guys who protect investors. But looking through this, so they said on Thursday they charged a man for defrauding $7 million from hundreds of investors. He was behind unregistered offering and sale of digital asset securities in an ICO. He used fake names and profiles. And finally, the complaint was filed in US District Court for the Eastern District of New York. The guy's not even in jail. He's not in. So, when the SEC are kicking back on the CFTC, being like, oh, well, actually, you're just a little, Commodity Futures Trading Commission. We're the SEC. We haven't even, they do some good, but at the moment, they just don't have any clarity. And that's something that I think is quite annoying. But I'm going to move on. Again, continuing with the SEC, they are investigating Binance. Some of you might have heard this, just giving you the quick overview on this. So they're investigating whether Binance's BNB token was a security at the time of its sale in 2017. Now, loads of ICOs happened in 2017. It was absolutely insane if you were there and actually part of the action. ICOs left, right, and center. Most of them have gone to zero. But the idea is now that some of them are successful, you then have the SEC saying, "Oh, well, hang on, maybe you and maybe you, but this one's not, but this one is," which is crazy because we all know what's happening right now with XRP. So they're filing for another extension, and this was recently in May, so only 2 weeks ago. And this has dragged on for months. So now to have the SEC, saying, hey, don't take this bill away from us. This bill, we're the ones who look after everyone. It's like, well, yeah, but you've dragged XRP through the mud for ages. Now you're looking to do the same with, BNB token, which is linked to one of the biggest exchanges in the world. It doesn't really seem like they're trying to help. They're trying to just do their thing, which is just shut people down and just hope that, once they've cleaned everything up, that everything's okay again. What's your take on this, AJ? I'm not sure how I feel about the SEC. Maybe I'm being a bit harsh though.
Yeah, I don't think many people like him. I think we can all agree on that. But yeah, it's as you said, just dragging them through the mud. Binance is such a a well established blockchain, and they have their exchange, of course. And I think dragging them through the same mud that they did with XRP is just, I don't think it's fair. I think, it's obviously going to affect the price of the BNB token as well. And, a lot of people I know, are staking that, hold a lot of their, portfolio into that. I know I've got some myself. And, that's going to affect all of us retail investors as well. So, it's not just affecting them, it's also affecting us.
And the projects that are built on BNB, on the chain itself, on the smart chain, I feel as though they say they want to help, but they don't really know how. It's like if a baby is crying because it's scared, they like go and run to it, which obviously is going to scare it more, but they don't understand, how this whole system works.
Yeah.
Let me know about that weird analogy. I know that's weird. Think of a better one for me, so I don't look like a weirdo.
I think what they need to do, is hire some people that are really into this crypto space and know a lot about it. I think that's what they need to do instead of just using the people that they have at hand.
Well, exactly. To a hammer, everything looks like a nail. That's a very common set, and it's exactly true. Now, I want to jump onto two more bits of news and before we get into technicals about Bitcoin. Firstly, so we mentioned this, I've been kind of running through the saga as a continuous series. Some of you guys may remember. I'm currently talking about Tron, USDD, currently offering around, I believe, 20% or so as a return if you stake on the network, which is Just Lend, as you see here. So this has had huge amounts of volume, even though the whole crypto market's falling. 81% increase in the stake, in the total value locked over the past month. 3 in the past 7, 1.5 in the past day. So we're seeing a lot of value being locked in. I believe it's up to 5 billion. You can get up to 30% as a APY, so your return per year, 30% return up to $5 billion TVL. And then after that date, I believe they're going to have a separate segment where you then get a lower rate, for not being one of the early adopters. But you can see it's definitely gaining a lot of traction here, moving from, I don't know exactly when this is, May 11th, May 12th, from 4.24 to where they are now, over 6 billion. That's pretty impressive, to be fair. It just kind of shows that there is massive appetite. Obviously, everyone wants to stake a stable coin and manage to get 20-30%. But I've said it before about its similarities to Luna. I would just say watch out, do your own research. But yeah, currently everybody seems to be going for it, which is could be a good or bad thing.
Yeah.
Finally, I'm going to get on to just before we get into the actual data of looking at the charts. Here is what the total liquidations look like across the overall crypto market. So in the past 24 hours, $215 million. Obviously, you might see a news report that was taken, let's say 6 or 12 hours ago. Their 24-hour period will be different to my 24-hour period, because obviously I'm doing it from now, before, not, so if you see different numbers, just keep that in mind. Primarily, we're looking at Ethereum, or $77.35 million in longs were liquidated, which is pretty unpleasant. And then looking at, nearly 58 million for Bitcoin. And then another big one was Solana, and Solana's actually down pretty hard. But yeah, just wanted to kind of show you this. You can see, look at all the different coins here that are getting wrecked pretty heavily. And it is kind of reducing, as the market, as everyone begins to see, okay, well, maybe I shouldn't be going long so hard on crypto. We might have had a fake out there.
Yeah, and someone said, nice shakeout, but how many shakeouts can we've had? I think this is about the third shakeout we've had now. So
I've been shaking more than like a can of Coke that you throw on the floor to see how high it goes, I'm like a Coke and Mentos at this stage. Just, relax.
Yeah.
But let's have a look at some of that data in terms of the chart there, AJ. Show you screen.
Yeah, so on the charts, we obviously, we've had that pullback, but there is, some slight bullish news. I just want to bring your attention to this tweet. If you don't follow our Twitter, make sure you follow our Twitter below. The link should be in the description. But I posted this tweet. Was it this morning? Yes, it was this morning. And I mentioned, because Bitcoin has carried off so many times in the recent months on these phony swings up, it will take a massive breakout to persuade people at this point. And when the genuine move occurs, a large number of people are not going to believe it. And that, is very, very true at the moment, because we have seen, I think this is the third fake out. Yeah. So this is a third fake out we've had. So out of this, resistance level here, we've had the first fake out back here, the second one here, and we've now had that third fake out. So this level, it's a very good resistance level. We found lots of resistance along this level previously, but we just can't find support. So what I meant, by this tweet is that, breaking above this level here, it's not enough for us. It's not enough for us to, flip at least short-term bullish, taking us back up to that possibly, $35,000 to $37,000 Bitcoin. So the next level that I am going to be looking at, and I did mention this in yesterday's stream, was this resistance level here. We found support along this level. Resistance along this level multiple times. So this is the next level that I'm going to be looking at for Bitcoin to break. If we do break above this level again, to me, that means nothing. We need to break this and then hold that as support. For me to anticipate more upside for Bitcoin. So as of right now, I'm not looking at this. I'm looking at it as more resistance, because we found it's so much resistance there, but trying to hold that as support. I'm not looking at that as support anymore. I do want to bring, some slight bullish news on the Bitcoin chart as well, and that is on the daily. Let me just show you this first. I need to drop down to the 1 hour. Here we go. So I did mention this this diamond pattern a few days, I think it was a few streams ago, and I mentioned if we did break to the upside, we would most likely see price action to the upside. If we broke to the downside, we would see some price action towards the downside. We did break to the downside and saw that price action to the downside. Now, this is a diamond pattern. We have a price action towards the upside. We see consolidation, big move in the middle, and then consolidation again. And then we get that initial. This is technically, a bearish pattern, but it can break to the upside. But we had that break to the downside. We had lots of price action towards the downside. Now, I did show you this a few streams ago. We have formed the same pattern, just inverted on the daily. Now, because it's on the daily, we're going to see a much, much bigger move when this breakout does occur. And the bullish news was actually a rejection. Now, you might think, well, why is a rejection a good news? Well, that's because we want to stay within this diamond pattern for another week or another 2 weeks for this pattern to be confirmed, and then we can get the breakout. So just like we had on the 1 hour, we had that big move into the diamond pattern. Now, yes, it's inverted, but it just works a different way. So this is technically a bullish pattern. The other one was a bearish pattern, but we've had that big move into the diamond pattern. We've had the consolidation. Then we've had the big moves in the middle. That's good. That's what we want to see for a diamond pattern. Now what we want to see is, coming and holding this support at the bottom of the diamond pattern, and then continuing to, consolidate within this diamond pattern. Then hopefully we can get that breakout to the upside of this diamond pattern, and hopefully that'll bring us, to around that, $37,000 Bitcoin that I've been anticipating. I've been talking about this falling wedge for a while. I want us to come and test this resistance at the top of that falling wedge. But yeah, so what I'm saying is seeing that rejection up here on the top of the diamond pattern is actually good, because if we want this to play out, we want to stay within this diamond pattern for, as I said, 2 weeks. So if we stay in this pattern for 2 more weeks and then break to the upside, then that's extremely bullish in the short term. And that will hopefully bring us all the way up to the resistance up here between 37,000-ish dollars. And then, as I've been saying, we can look at, seeing a potential rejection, forming that potential higher low, and then, breaking this this lower high trends that we are forming at the moment. Because as of right now, I've been saying this for over a week now, that for me to flip bullish, we need to get above that $47,000 Bitcoin. Now, we are very, very far away from that right now. So what I want to see, and what I've been telling you that I want to see, is that lower high. Once we get that lower high, then we can, have a lower price that we have to break for me to flip bullish. And, that could be, between that $35,000 and $37,000 Bitcoin. But why I want to see this is because what could happen is we could break out of this falling wedge, which is bullish, but it wouldn't make me flip bullish. This would, make me flip neutral, because we are still having those lower highs. They're not pretty lower highs. We would have broken this trend here, but we could come all the way up to, approximately $46,000 and still form a lower high. And that is still very, very bearish for Bitcoin. So what I want to do, is see Bitcoin form that lower high, maybe around this resistance level here, and then break that trend by breaking that lower high there. That'll be great news. I can flip bullish, and then I can start talking about the targets for the breakout. If we do break out of this falling wedge, the first target will be around $47,000, and then the next target would be, near all-time highs at $65,000. But first of all, we need to get this breakout of that diamond pattern, and then we can, start looking at seeing the price come up to that resistance level. Then we can start talking about the breakout or the rejection.
Yeah, no, absolutely, absolutely. That's the thing. We're all kind of waiting for that, but yes, we're currently in a bullish pattern. If we break out of it,
Yeah,
but
yeah,
we're the only way we have to be realistic. We are falling. We're constantly
yeah,
hitting lower lows, lower highs.
yeah,
And like everyone loves a perma bull. Like obviously that's the opposite of a perma bear who's always bearish. It's a shame because if you say anything bearish in the crypto market, everyone's like, I
yeah,
hate
yeah,
you.
yeah,
Which fair play, no, I don't like hearing bad news either.
yeah. I
So
know.
we have to agree, or at least recognize the patterns that we are playing within and prepare
Yeah,
for either side. But just like you said there, AJ, hopefully if we can break out of this, we had a solid diamond pattern be confirmed to the upside,
yeah,
which on the smaller time frames. And
yeah,
so, if we can get one on the larger time frames, and obviously, as we all know, the typical larger investors, they play with the larger time frames. So
yeah,
it's much more likely that we're going to see a big move from something
yeah.
on the daily as opposed to that on the 1 hour.
Yeah, yeah, exactly. And as I said, that rejection there is great because it confirms, well, it gives us more confirmation that this pattern could be a potential pattern. It's not fully confirmed yet. I'd like to see it just consolidate a little bit more towards the end of this diamond pattern, and then that
Yeah.
initial breakout will be great for us. We have to take into account that we can break to the downside as well, but technically it's a bullish pattern, so I would expect it to play out bullishly, but there's always that little chance that we can break to the downside. If I'm correct, I think the chances of this breaking to the upside is 60%, and then there is that 40% potential downside out of this pattern.
And that's just that's kind of focusing on those majorly the kind of technicals. There are a lot of fundamentals that are in play at the moment. Just to kind of quickly touch on those. So I was going to say I've never seen this. I'm quite curious. But back to the point I was making, which was that looking at the fundamental markets, we're having a thing. I mean, Target, for example, you don't really necessarily need to know this, but they've just dropped 8%. Because they're constantly changing. They're now ending up with slightly larger supply, and they're going to have to start increasing their prices to get rid of it. And now that's one part of the story that I want to tell, which is just quickly that inflation is poised to ease according to 3 key indicators. Now, we don't know for sure, but we know one of the major, should we say, catalysts of this massively high global inflation, I'm not talking about just regional, but global, is that we're seeing the massive semiconductor shortage. So that's the chip shortage. Obviously, with what's going on in Ukraine, that has then massively reduced the supply of quality neon gas. Now, I think they supply 90% of the US's quality neon gas in order to produce chips. But looking at the production price, the price, that's coming down. The shipping index is coming down. The fertilizer, which is a very strong kind of precursor and bit of correlation to food, supply and availability, is also coming down. So in terms of the food shortage, that's looking relatively good via these metrics. Shipping, for global shipping, that's looking relatively good. And then also looking into the tech and semiconductor space, that's looking pretty good. Also, just want to, kind of touch on a couple other stories. So one thing to consider, China is now opening up quite heavily. So there's going to be a lot of manufacturing. We're going to see a lot of the commodities because China are making more stuff. So commodity prices will go up, but that will enable more global transportation. The general, should we say, international shipping crisis will kind of begin to come under control. And also, yes, we have rate hikes. I know people are kind of concerned about that, but we also have quantitative easing. This is easing, which is one thing. I watched a video, and there was a YouTuber, and he was talking about inflation rates. It was about crypto, but he didn't mention quantitative easing. So, I think bringing that together with the interest rates will be quite good for global, for US inflation, I should say. But for global inflation, via those metrics we've just seen, I'm feeling, relatively good that we're going to begin to see a bit of a change over the next couple of months. And I'm not saying we're going to be.
Have we lost him? Is that me or Ben?
Okay.
I think we've lost you, Ben.
Okay. So I will.
I think we've lost you.
A great day, but if I am not back, then I guess I'm just talking about that. Either way, we'll sign it off here and make sure that you like the video and subscribe to the channel. Thank you very much for watching.
You sounded like a robot there. Yeah, thank you very much for watching the video, guys. Please slap that like button and make sure you go over to Twitter and follow our Twitter account. I'll be keeping you updated there with charts. There's not much going on with the charts at the moment, but when there is, I will be keeping you updated. Oh yeah, Robo Ben. I will be keeping you updated over there. So make sure you go and head over to our Twitter, follow us over there, and yeah, slap that like button, turn that bell notification on so you know when we are going live. Thank you very much for watching, and we will see you tomorrow. Thank you very much.